Hi guys, welcome back to the channel. Today's is gonna be something a little bit different. It's not the usual video update about my trading performance, but this is more like a trade breakdown that I wanted to do because lately I've been recording my trade and I'm going over them, like journaling, pointing out what I could have done differently and what I could improve on. And I really like the breakdown of this trade, like especially the technical management on both 5-minute and 1-minute time frame. So I wanted to break it down real quick, give you guys what I think about my execution on the trade, some of the stuff that I did not do right, and the frustration could have been there, but I just use it for experience and then move forward. So without any further ado, let's get into it. So this is NQ trade today after post CPI, and post CPI, and I already made some wins early on between 8 a.m. and then around 9, and I wasn't really looking for trade at 10, but then this setup is kind of like one of my high probability setups, so it presented itself and I did go ahead and take the setup. It was a trade that was really well managed, and when it comes to the risk on the trade, I dialed down my risk, which as you can see here, I'm just trading one micro contract, so the risk on the trade wasn't much. The return was I think 3 times the risk, which was good, but it was good for experience as well. So here we can see on 5-minute we had the Judo swing from 9:30 that take out the sell side. We got the shifty market structure, like around 11 we got the fair value gap, price drop back into it, and I noted the fair value gap, which as you can see here we have the London range from high to low, and we are trading fairly below London's range, and we have some relatively called high here that I was targeting. So once we trade back into this fair value gap, I notice the trade when this 5-minute candle was trading up around here, so that was where I put my entry around 1985, and then I put my stop fairly close to the low here. It was at the low of the fair value gap, but then I trailed it down at the low here. But now I want you to pay attention to the left side of the screen where I'm doing the 1-minute management and why I was sticking with the trade, even though if you look at it right here, it doesn't look like it was gonna have the strength to go higher, but the confidence to stick to the trade comes on the 1-minute time frame. So as you can look here, prior to the run up there, we do have a volume imbalance, right? So price kind of like bump. That's the close on that 5-minute right here, and then the bear is a down close candle that's here. So we have a couple of volume imbalance here, and then we see price trading up, kind of like displacing higher, creating a breakaway gap right here. And I noted this line between the high of this candle and then the low of this candle that touched itself right here. According to ICT, that's an immediate rebalance. So once it immediately rebalances this, I was very confident on the trade. I was very confident on the risk that I had, and let's just see how it unfolded. So since it hit that level, pretty much price is just very bullish, and then I note also inefficiencies that could hold price. Prior inefficiencies, this was old volume imbalance around CPI, and then I see how price traded through. It gave me much more confidence. I have my take profit up there, but there's something that happened that I wish I could have managed it better, but I just didn't do it. So I noticed this volume imbalance, and we just closed at 5-minute. I didn't want any big retracement back down into this volume imbalance anymore, so I was watching to see the reaction around this level. It reacted perfectly. Then I decided to trail my stop at the low of that volume imbalance, knowing that price should not go below that volume imbalance. But then when we hit the high here, there's a strong pullback that was coming, and at that moment I was feeling scared because it was close to my stop loss. I started paying attention to the P&L, and there were some numbers that I thought was interesting that I would have loved to close above, right? But then when it started dropping below that level of P&L, which I shouldn't be focusing on the PL rather than focusing on the price action, I started internally kind of like questioning myself, questioning the trade, and becoming anxious. So I was like, okay, it's fine if it just takes me out, and it did not take me out. So it did not take me out here. However, when it went back here, I'm like, damn, I like that P&L level. I'm just gonna close here, which is a good idea. I lock in the money, and I don't have to go through the stress. But I left at least 1/3 of the trade or half of the trade on the table. As you can see, it just takes me out. Once it takes me out, it continues moving higher, and I notice this gap, which is an inversion fair value gap. So you will see me noting it here. It traded above, trade back into it, and then from here it just expanded all the way to the buy side. It was a very nice trade, nice price action. I'm not gonna lie, I would have loved to sit down and be into it, but I didn't. So what I just did, I point out to where the thing happened, the mishap happened, and kind of like just journal about my psychology and my feeling in that moment, so that when I go back to look at it, I have some things that I learned from. And as you can see, price just nicely move up, getting out of, getting to that buy side that I pointed out here. Like I said at the beginning of the trade, if you were just to look at that 5-minute candle, you wouldn't think that it's going to run up that much, but it's the delivery on liquidity. This is the things that I'm actively trying to master, that understanding of market. And, I just wanted to break the trade down real quick. Hopefully you can learn something from it. It's just a short video, so there's not much to it, but hopefully it is insightful. Until next time, my friend, I wish you peace and nice trade and safe trading. Till next time, bye.